Let's see. So, normal review indices, review Forex, take a couple questions, upcoming plan for this upcoming week, and then I want to talk a little bit about trading barriers at the end. I just want to gather a few comments from people because I want to do a lesson in the future on that. So I kind of want to hear some perspective from you guys on that, and we'll answer a couple things, but kind of just want to gather a few topics on that. I am recording this. Trying to get a few more people in here. So I do have the recording going in the background here. It's going to be probably a little bit better quality than the one last week, as I was doing that on my Mac. But now I'm back on my desktop, which is going to be a little bit better because I can have OBS going on it. Okay, a few more people. Get the chat going. So yeah, we can get started. Make sure that's good. But we'll start usual with the economic calendar from last week. This also is adding on to the fact that we also had holiday Monday. Now, that's one of those things where, it's a U.S. market holiday. That was Memorial Day on Monday, so it was a half day of trading, but with that, you don't get a daily candle because it wasn't a full day of trading. So it's really specific to indices more than anything. I think it does kind of have a secondary effect on, Forex markets, but for indices, you're not going to have Monday trading. For one, you probably don't want to trade intraday on that because it's a half day, it's a holiday. But that also comes into the fact that you don't have a Monday daily candle. So you can almost treat Tuesday as you would a Monday. So if you're not usually someone who trades Monday, then this week you wouldn't trade Tuesday because you have no daily candle or not the full price action to look back on. So most people probably would have benefited from at least obviously avoiding Monday, potentially avoiding Tuesday as well for that factor. And then, with that, there's really no other high impact news for the week. We had PCE on Friday. That's medium impact. That could potentially affect you intraday. But other than that, Wednesday, Thursday, Friday, potentially Tuesday would be, the days you're kind of looking at to trade in regards to all of that. So kind of getting out of the economic calendar, another one of those weeks where no high impact news. So nothing really too big to key off of there. Just kind of being in consideration of that holiday on Monday for Forex, may not have affected you as much as it's still traded on Monday. Get this person in here. But outside of that, going into this week, so I'm going to do this in the kind of the perspective of, you didn't trade on Tuesday and, you let Monday go, you start trading on Wednesday. A few things with this. So obviously when we open up within this weekly range, I had mentioned on the last stream that it's really going to be dependent when we're opening up in a range from a high to low, obviously around the middle of that. This goes for NQ and ES, right? We're opening up in this previous range here. We're going to be really keying off of how the weekly opens, right? Do we trade higher Monday and Tuesday on these days we're not trading and we're looking back on Wednesday? Did it consolidate? Did they expand in one direction? So when we're going in on Wednesday, how did the opening days of the week trade within this range, and is it giving us any context as to how the following day should trade? Where is our protocol going from that point? So here, if we look, I'm going to mark out the weekly open, Sunday 18. That's where the weekly candle opens. And we're going to be in consideration of the fact that, maybe you waited until Wednesday to trade. And this is the price action you're kind of casting back on and saying, what did we do at that point? So we can draw out, kind of put some emphasis on this here, the weekly candle, and a few things here, right? So from this point, I'm going to ask myself two things, right? Did we establish any relevant low below the weekly opening price? I can look here and pretty confidently say, at this point, I didn't trade very far below, didn't trade to anything relevant, at least on the hourly, definitely not the daily, right? There's obviously nothing there. So when I look at this, I'm going to say, okay, there's nothing below the weekly opening price that I could say that's established as a low, and I want to trade higher off of that. Is there anything above the weekly opening price that it form a high that I'm comfortable trading away from at that point within this range? And based on perspective, you can kind of draw a few different conclusions. So for me, when I look at this, obviously the first thing that points out is, we're trading above the week opening price and above that level. When I look left, I think this is a lot more clear on ES. Obviously, we had this previous week here where we ran above this range. Obviously, failure swings here. This is insignificant to me. We run above this high. Obviously, we have clear, aggressive run back into the range, and then we're returning back internally. And we have from this high that we don't expect this to get traded back to. Where can we frame a level off of these two up close candles on the 4 hour? This is the most clear. If I draw that out, we're trading right off of that. And that's a level that I could consider relevant and in line with, what I'd be looking for. So Monday trades higher, Tuesday trades higher. If I drop that down, even on the 4 hour, you can see it, right? It's pretty clear here. We have our change in state of delivery intra-week. So on the daily chart, consolidation, expansion, retracement, expansion. That's kind of the idea. And I said, someone had shared within the Discord, right? This is kind of a perspective. And I said, this is the one I'm really kind of aligned with for the week. But at this point, if this wasn't enough context for you, then you have to say, if this isn't enough, you can trade this as a range, right? So this is, if you're internally speaking, this is the framework you're looking for and you want to be drawing down to this low. But if you were trading this as a range, I'm going to do this on ESU so I can, or yes, whatever we're trading off right now. Yes, yeah. Move this. A few people coming in. If you were trading this as a range, right? So in the case that, say this internal range wasn't enough context for you, then you trade this as a range. And it's just going to take a little bit more patience because it's a wide range, because we need to let price go to one side. This is an option for you if that internally wasn't enough context. I look here, I'm going to be interested in when price reaches one side of the range, how is it reacting off of that? What day does it do it? And that's going to kind of give me the bias from that point on. So, here we expanded into that on Wednesday. And I want to say, is that a convincing reaction off that point to then trade it back internally? Or is this something where I could say, okay, we've hit the external low of this range. Should we continue lower at that point? And for me, this is a very weak close. And it's not reacting off that low in any capacity where I'd want to trade that back to the upside, at least for this following day. So this would be a point where you're, even on the daily chart, we're trading off these up close candles. We've had a really weak close into the low of this external range. And that would be a sign that, we're not really reacting off of that. I let all this go. And at this point I could say, we can trade that as a Thursday continuation lower. And here, my mouse is acting up a little bit. But Thursday, in the scenario, you're playing this as a range. We're opening up. Really no reaction off this external range low. Trading higher off of it. At that point, around New York Open, you'd want to be framing some sells at that point. I think NQ might have had a little bit of a better reaction there at that point. Thursday. It sold off a little bit into close, but the open is kind of what we're focused on. So you have up close candles on the hourly, trading back into that London, trading up higher, up close candles. You could drop down. 15 minute. I mentioned 5 minute wasn't very clear here, so 15 minute was looking a lot cleaner. Right there, 8:30, run out that high, 9:30 close below. You could take that as a sell, either on this opening of the candle, if that's enough If that's a comfortable range for you to put your stop loss, it would be at this high. Or if you want, or if you are demanding that retest, this here would have been your entry, stops at that high, and then you get a decent reaction off that low, and then some form of a continuation by the PM session. So that really would have been, if you're trading it as a range, that would have been your protocol. But for me, that was kind of, this internal framework is enough to say that we should trade lower off of that. And this is kind of more, I'm usually almost always going to be biased towards trading, doing day trades. That's just what I'm most comfortable with. But due to just kind of, doesn't really have to do with the charts, but the circumstances of being away and not really managing as much or being as active or in tune with the market, I had taken a swing in here off this internal framework. This is kind of what we have in the foundation model. We run above a previous day high, and that opposing run creates up close candles. That's our change in state delivery, whether you do it on the 4 hour or the 1 hour. Here, that is a sell, and I'm looking at least this external low as a swing position. For day trades, I think on Wednesday, that really wouldn't have offered you an entry intraday based on the daily profile, because it really just kind of dives off from the opening price. That's really not favorable, but the narrative is there. All in all, I think Thursday probably had a better opportunity for trading that short. So I'm also going to answer a question that we had. So I could probably remove this. Let's see. So this was a question on AUD, which is relevant to kind of the scenario we had this week. So AUD, this is from a few weeks ago. That was from, I believe, was it this high? I think it was this. Yeah, it was this year. So what we had was, I can probably bring that up. So it was this year, right? So I said, with this framework here, Monday, Tuesday, Wednesday's trading, just based on this daily chart, where should Thursday and Friday trade, or at least where should Thursday go? And, for me, this is where you would be looking for an upside trade based on a few different things. And the question is, why here in this scenario is it clear that we should be trading higher versus on NQ, where we still had, right? So we can see Tuesday ran out Monday's high, but failed to run this out. Why is this an obvious buy where on NQ it's a bit different for this week? So what we had here, right? This was kind of the framework that I was looking at on this daily chart. We have on the higher time frames, obviously, that's an objective. That's kind of an overarching draw that I'd be looking at, but even a little bit closer than that, right? We're trading off of this down close candle here. And I wouldn't want to be trading away from this high here. I wouldn't be considering this a protected swing based on how close it traded to this high. And when I drop down to an hourly chart, right, we've traded deep back into this range. And even though we've had this run on this high, I'd be demanding this to be ran out, because when I look at this and I look here, there's no level or anything that I could frame that off of, versus when I look at, and also I'm also going to bring up the point that for AUD, I can't bring up a correlated pair that's really significant enough to really key off of instead. So when I'm trading or looking at AUD, I really only have this pair to look at, right? You can kind of, it has some correlation to dollar, obviously, and euro, and it's going to move relative to those, but it's not direct enough where I can kind of look at another asset and then say it should go in that direction. So AUD is very singular, where NQ this week, why I really wasn't looking at it in comparison to my entire focus being on a ES, is because if this was a scenario where NQ is a singular pair and there's nothing else I could look at, right, we're trading very deep back into this range, and at this point I would absolutely play it as a range. I would not be convinced that this high is protected at this point, and this would not have been enough. But when I look at ES, it didn't trade as deep back into that range, and still in respect of, right, we had this run above the high, This I consider protected on the daily chart especially, and it did not trade all the way up. Right? It didn't come at this point and then stop here and then started trading lower off of that. It's still in very clear respect of these up close candles. We're trading right off of that. So when I look left in that range, I can obviously frame that trade off of this here. Versus when I look at AUD, USD in that scenario, there's nothing I could drop down to and then say, we're in respect of that. It's trading very deep back into the range, and I would have to, mark out the external high and low and play it, as such. But for the scenario, since it's indices, I can just look at ES instead and kind of use that as my focus, right? Where I didn't really have as much going for NQ at the time. So kind of really just putting my focus here instead, which is kind of why I came to that conclusion. If you were really focused on NQ, then I could 100% see, why you would draw that conclusion to just play the range, which isn't wrong. But also, taking this into Friday. So really interesting day. I was kind of bouncing in and out of connection on this day, so I wasn't really able to look too much. But obviously this is going to bring me back to a rule that I'm going to mention many, many times. When Monday or Tuesday here, forms a high and we're expanding off of that, on Friday, I'm not going to trade continuations away from that reversal. It's not how a weekly candle forms, and it's almost never going to be a scenario where I'm doing that. So if I can kind of bring you over here. So say I'm talking about Monday or Tuesday, forms a high. We open up on the week, we're trading higher, and we formed a high on either Monday or Tuesday. And from that point, Monday or Tuesday formed a high. We're expanding off of that. Wednesday, Thursday at the least. Right? We've expanded off that high. Wednesday, Thursday, we're going into Friday. Am I going to trade a continuation lower? Regardless of what's happening on the charts, what is the scenario? It's very unlikely that I'm ever going to trade Friday as another continuation lower. It's almost always going to be looking for framework for Friday to return back into that range. And this is how weekly candles are being formed. Right? So if Monday or Tuesday forms a high, we open up and we form a high on one of those 2 days, and we've expanded away from that point. This is a weekly expansion profile. Weekly expansion candles, I don't expect price to close at the lows, right? If it's a bearish expansion week, I'm always expecting price to come off of that low in some capacity. That's always going to be my expectation, versus when we have something like a midweek reversal or a consolidation reversal where we've traded 2 or 3, maybe even 4 days, and we form a reversal. These are profiles where I'm expecting price at that point, Wednesday, Thursday, Friday, I'm expecting that to close near the low. I'm not expecting a profile in that capacity to then at that point, we've reversed on Wednesday or Thursday, expanded away, and then Friday has to trade back higher. That's not what I'm expecting. In those type of profiles, I'm expecting closes near the lows or closing near the highs in the week. And in a scenario like this, that's just not what I'm looking for. I will never, be looking for that continuation on a Friday. It's just not how weekly candles are being formed, 90% of the time. So, what we had here was kind of interesting. There's almost 2 opportunities depending on, what you're looking at. So obviously Monday, or we still have Monday trading, but Tuesday high expanding off of that. Friday, I'd be looking for some type of return back into the range. And this is very odd price action, but I guess it kind of gives you 2 opportunities. But this is the thing with news, right? We have 8:30 news. So if you're following foundation model or that protocol, then, medium impact news, you would have been not holding through this or not opening a trade prior to it. And when it comes to, medium impact news, that's going to be a personal thing where, unlike high impact news, where in my opinion, NFP, CPI, you should almost never be holding through those events, because that's when you genuinely lose control of risk, because you can get slipped completely. That's when you genuinely have no control at all. But for something like this, right, medium impact news is kind of up to the trader. If you're at this point, right, if you took a buy around here where, we had the framework for it, this is kind of ideal framework for a TGIF setup or a Friday return back to the range. Right, we're ranging overnight. Monday drop, or London drops lower. Obviously manipulation on a previous day low. That opposing run, 15-minute chart, makes these down close candles. And, same thing, ES or NQ. They both had the same framework intraday. That could be a buying opportunity. And at this point, right, 830 does expand it higher. If you didn't trade the news, then this is a trade you miss out on. If you did, this is a valid trade completely. But then this is, this is kind of reminding me of, this is like price action from summer of 2022, like insane ranges and just bouncing all over the place. This is not a sell that I would ever take in consideration of that rule. And even at that point, maybe you're still thinking about that return back into the range where we're expecting price to close up in some form back higher. Not that I took this trade or probably would have expected to take this trade, but really interesting here, trading back up higher like that. But that's kind of the idea that we're using here is, Tuesday high, Friday's going to return back. They both do that in some form, right? NQ does it as well. So something just to look at. It had that same framework as well, right? If you were to trade this, run on the previous day low, down close candle here, that could be a buying opportunity, back up into the range, and then around 9:30 starts selling off, and then eventually comes back higher. So that's just kind of the logic of it. I wouldn't say that that's probably some trade that everyone took or you should have taken. Just interesting how it worked out. Let's see. Do the hourly SMT at the highs between NQ and ES support your idea, or wasn't really important? Completely honest, I don't even, or didn't even really take that into account. Like if I look at this now, I can see what you're talking about just by flipping back and forth, this high to this high, this high to this high. That can be a factor. For me, it wasn't really part of it, as I'm more focused on these 4-hour up close candles to be in respect of that. So could have been part of it, but not for me in this scenario. Do I always check the weekly candles for your buys or just the daily? So I don't have to look at the weekly candle to know what's happening. Most of the time, you can just look at a daily chart, mark out your weekly opening price, and you can imagine what the weekly candle looks like, because the weekly candle, I'm not anticipating the weekly candle based on the weekly chart. I'm doing that based on the daily chart and how the days are developing. So not really something I'm looking at the actual weekly candle for, mostly just envisioning it on the daily chart. But that was indices for this week. Kind of the logic we were following. Did the Friday return back to the range, breach 20% of the weekly range before heading lower? I believe it did. We can mark that out actually. So high to low at that time. I think my TGF is a bit different. 8.2. All right, so that's that minimum expectation. That would have been, it did reach it at that point. You could have been, so right, one of my settings for me are 20% and 50%. That's minimum expectation, maximum expectation, 50% of the range. And then you also, you could have 30% as well. That would have been a target you could use. So that's what you would have been looking at. But definitely, that's enough of a move to catch, and then end the day, it just looks kind of minuscule based on this just absurd volatility. This is still a, 183 point move, saying you're getting on side around here. So that's plenty to, catch if you were to. So let's see. That was indices. I'm going to move over to Forex, because really almost all markets were set up similarly, just played out slightly different. Same thing with EU here. We had talked about on stream going into that week where opening up here, really the only thing of interest was this high. Anything outside of that framework to get up here is really what we're looking for. And if it didn't give framework to get up to here, if it traded higher without giving that, at that point we would be looking for sells in the opposing direction. Everything kind of points to this high. And at this point, I said if it doesn't reach that high and it trades away from that, the only scenario that you could short that is if we have an SMT. So, what we had here is we opened up on the week. There's no framework to get higher or to get on side with that move up from Monday. So you kind of be looking to frame it in the opposing direction. And while we fell short, if you look at GBP, you have obviously an SMT. So failing to take that high out while We open up on Monday here on GBP, and we're trading above that high as well. So that would be a scenario where you could say, okay, there's an SMT at these highs. I can look for something in the opposing direction, and that would have been, you would have had potential framework for Wednesday selling within this candle wick, right? You could measure that out if you'd want. 50% framing sells below that point, and there's some framework in here to get short on Wednesday. Let's see, right? This is kind of similar where it's not very clean, but the narrative plays out. That's your daily open. But really my main interest was after Wednesday, if you get a weak close on that daily candle, to look for a continuation lower. But at that point, we had pretty similar framework on indices where actually we get that weak close below the range low, which you usually want to see if we're trading that continuation. Mark out, let's see. Only difference here is by the time we get to New York, where you kind of get that weak close. But this had a really aggressive move back into the range. Right? By the time you get to New York, 8 o'clock, 9 o'clock, we're pretty deep back into that range, and really would invalidate trading that continuation at that point. Here you're delivering off this London low after 8:30 news, and you're pretty deep back into that range where you really wouldn't want to be trading that lower, but also it's a bit difficult where, for me, I had mentioned this is more of a two-sided market where it gets kind of tricky. So again, kind of looking at the following day, right? Do we get a strong close on this daily candle? And at that point, this rule kind of comes back into play, and this is where the easier trades kind of come to life where, all right, Tuesday high, we've had an aggressive return back to the range. We're closing near the high on this daily candle, where now I could say, okay, it's obvious we're respecting this range low. We're delivering off of that. Going into Friday, I'm going to be looking for a continuation higher. One, because on Friday, there's a Tuesday high. I'm not going to be trading that to the downside. I'm not going to trade a Friday continuation lower away from a Tuesday high. We're respecting this daily range low. We close strong. So going into this day, I'd be looking for framework to get on side with that move higher and start looking for objectives like this, 50% of the range, or whatever that may be, projecting market structure in that sense. So if we mark out here 18, this is more one-sided framework where we dip below the daily opening price. I'm looking for buying opportunities in here. Let's see, this is a pretty deep run below, but we'd be looking at London session, or where's New York open? Yeah, that was Friday 8:30 news. So assuming you probably would have been looking at London session. This was an SMT here, so that would have been your only confluence to trade this higher, right? So usually you'd want to see a run below this during London, but we have an SMT here with GBP. So SMT here. So that would have been what you'd be looking at for Euro. SMT, 3 o'clock, you have a change stated delivery, that SMT at the low. That could have been a buying opportunity to get on side with that. And that's a decent trade there, even if you were to, if you were to hold through that 8:30 news. So decent for Forex. That's more of a one-sided daily candle that you'd be looking for in regards to, playing that range. Really not much else of interest. I think Euro delivered better than GBP, and pretty messy on gold. Tuesday. Foundation model, yeah. So the only 2 days trading for indices foundation model wise, you have Tuesday, and then if you're not trading before news on Friday, yeah, Thursday and Tuesday would have been kind of the days you're looking at. What about Thursday's low. Are you talking about for euro? What about Thursday's low? Sorry, I hadn't seen the question when you sent that. Go trade the. Yeah, so if you were, from my perspective, it's a little bit two-sided, but absolutely, if you were looking at that as a run on the range and you're looking back higher, absolutely, 15-minute chart, you'd probably be looking at even 30-minute. It's pretty clean here. So 3 o'clock here, we close above these down close candles at the low, pretty clear on the daily profile. That could be a buying opportunity here. Stops at the low, so you'd be targeting 50% of a previous range here. So definitely, if really based on perspective. So for me, it's a bit difficult, but if you're coming from the point of view of looking for a buying opportunity, it's pretty clear framework. Running below previous day low, London closing above those down close candles, and then you get that continuation overnight and then into New York. So completely valid trade. I'm just sharing it from my personal, realistic perspective. I don't like to pretend like I saw it coming like that. Is Tuesday tradable for indices, being the day after bank holiday? That really depends on certain things. So tradable in the sense that I think many times it really depends. If you're not usually trading Mondays, then it's a bit difficult, right? Because you go on the daily chart and there is no Monday daily candle. But I also think in regards to volatility, sometimes it can be hit or miss on that, where the day after a holiday or the day before a holiday can sometimes be difficult when you're looking for these really nice clear moves. So that's why it's day trading wise, it can be a little bit more challenging. So that's why I mentioned most people, it's probably more favorable just to let Monday and Tuesday go, and you can see that really the big moves are occurring after that. Yeah, and I can understand, that's kind of where I'm coming from as well. Tough daily close to, just go right around for that reversal. Same idea with indices, similar thing. We're closing really deep in the range, so and it just has that continuation. So nothing wrong with, kind of feeling that way. Indices. Okay, so I'll take questions along the way. I'm just going to keep kind of going through this. I think to talk about the upcoming economic calendar. So first week of June, or first full week of June, non-farm payroll, Friday. And obviously you'll see this, but that's not non-farm payroll. 8:30 on Friday is the actual event. So high impact news, Monday low impact, Tuesday low impact. Everything else is low impact other than 8:30 on Friday. So what I'd be looking at, generally speaking, economic calendar, the only day that is restricted based on that for me would really be Thursday, day before non-farm payroll, and then I'd be looking for post 8:30 on Friday for potential opportunity. I wouldn't be trading intraday before that. Obviously, it's high impact news. That's one of those difficult ones where we've kind of seen in the past where it plays out to our logic and what we're expecting, but doesn't always give you that entry. It's kind of that thing you have to sacrifice for managing risk. It's just letting it go, and I'd be waiting till after 8:30 on that day. So with that in mind, on indices here, I think at this point, so NQ and ES, again, I'm more interested in seeing this trade higher for now. Really on both ES and NQ. One, on the basis that there is no framework for me to get on side with this short for the time being. It needs to kind of get above these highs, and I do like failure swings. Obviously, we have that pushing into the range that was never hit. And this is kind of reminiscent of what I mentioned last week on Forex where I kind of want to be seeing price trade higher first. So what that means for the weekly candle is what I'd really be interested in seeing, or I'd want to see from the market, is we open up on the week, and one, you either consolidate around the weekly opening price and then drop below, and that's kind of your framework within this really large range, and then you can get on side with that move higher, aligned with the weekly candle, or we initially open up and we get that without forming any relevant high. We start dropping lower below the weekly open, and we can kind of frame buys at that point. That would probably be the ideal scenario for me, because that's really would be my interest. This is a really aggressive return back to the range. We do have opposing draws, so right now, looking at this, only interested in framing buying opportunities around the opening days. And I think this isn't really concerning as an SMT for now, just because it's not really trading back into anything of interest. So obviously ES had a bit of a stronger run, so it is stronger for now. I don't necessarily need to see it return all the way back to these down close candles, but if it does, I'd probably at that point, I'd be using that as confluence as well. But really, I'd want to see opening days of the week either consolidating, manipulating lows, or making that opposing run lower. If it expands higher, we're going to have to readjust that expectation. But for now, looking higher, failure swings, and then these external highs on the daily is really what I'm looking at now for indices. Expecting this low not to get ran out prior to doing so. So that's really what I'm interested in for now, and we'll kind of track that from there. Someone had mentioned, is Monday a tradable day for indices? And some scenarios where it's going to be a bit more simple. But for this, if you're going to trade Monday, you really need it to open up and drop fairly quickly, and then you're going to trade some form of a reversal daily profile because it needs to get below that daily open. But usually it's most favorable to trade on Monday, right? So we do have manipulation, but Monday you'd really like it to open near some relevant level. So if Monday this is a really large range to play. So if Monday's trading, doesn't reach something like these down close candles, then you don't really have as much framework to trade a Monday reversal to get higher at that point. So, you can do it, but it's just going to be a little bit more challenging. You like to see Monday, open closer to that level so it can drop and not have to make this really large run back and then, get higher into that range. So, probably not something I'll be looking to do, but if you're doing that, you'd want to see Monday on the daily candle drop lower first. And similar on Forex, when I look at Euro particularly, I really haven't been looking at GBP because it's just messy. This here, kind of just coming full circle where kind of going right back to this is the high I'm looking at. And to get there, right, we either open up on the week and then you start trading higher and then this becomes framework to sell. Or if we open up and drop lower, I'd like to see go to a 4 hour. These down close candles support that idea and not trade back to this low and definitely not back here to get higher. So would really like to see, if we're going to get framework to be on side with that, drop lower and then not take out, not this low, but definitely not this low if we're going to make, an expansive move up to that high prior to non-farm payroll. If it stays range into NFP, then we're going to be marking out external highs and lows, looking for that manipulation into the news event. So for now, opening days of the week, similar, because at this point, there's nothing I could frame short. If it trades higher from here, where do I frame that short? These are all swings where there's nothing here on the hourly that I could say, I'm going to trade off of that because this high didn't trade into anything relevant. This high didn't trade into anything relevant. So now I'm being drawn right back to this previous high where this is just the obvious thing that I'm looking at. So I couldn't frame shorts here on the opening days. I'd like to see bullish framework on that. That's what I'd be really interested in. This is a very similar swing to the one you intended to take on a Monday about a month and a half ago. You go a little deeper on the framework you look for in the trade management as well. So for me on Monday, I still hold, if I'm ever positioning on Monday, I still hold low expectations for that day. I don't expect it to make some expansive, large move. So I can't refer exactly to which one you're talking about, but the framework I'm looking for is, I'll even go over a failed one because it had a good framework for it. I believe it was on this day. No, it's around here. This here, yeah. So this was a framework that I was interested in that had a valid Monday trade. So on the daily chart, we had ran out that high, and on a Friday, we ran that out, change and save delivery, really weak close on that Friday daily candle, and we're opening up the week, down in here. So on Monday, any real run like above this high, if a bearish daily profile printed within this up close candle on Monday, I would be positioning myself with stops at this high and likely not exiting that position on Monday, but expecting Monday to, respect that, but then really Tuesday, potentially Wednesday to expand lower into this opposing draw, right? But here, by the time we get to New York, we've already invalidated that idea. We're trading far above that up close candle, and it wouldn't really offer a swing opportunity. And that's how we're developing bias. This was a week where we ended up taking, positioning or redeveloping that bias to long based on how that played out. It just didn't offer that setup. But that's what I would be looking for, for a Monday position. 15th of April this year. Yeah, this is the same idea where it did validate that idea. So 15th of April, up close candle. That's that framework. If we're going to get lower, these lows that I was looking at for a very long time, opening up on Monday, right below this up close candle. That's the last thing in the way that I want to see it deliver off of. We get into New York, into 50% of this up close candle. And on Monday, we open up and we're trading instantly higher. That's kind of that last line in the sand where this is that level we're looking to trade off of to get into that opposing draw. So position trade. But this is just a scenario where Monday made just an extreme run, which is not something I was expecting. It just kind of happened. I would expect Monday to kind of just form a reversal daily candle, and then Tuesday to get into that low. That was just kind of the framework for it. Could you use 50% in that scenario with the previous range on ES? %50 of the daily range? This huge. I mean, for me, not really. If you're talking about this here, 50-minute, 50% of that. Not really something I personally do. So this is a reason why I don't really use fair value gaps, at least in that sense, right? So I could kind of come into this and say, I could use that as a level 50% and say, that's what I'm looking at. But then it kind of gets subjective where I could say, someone else can come in and say, okay, I'm going to use a 30-minute and I'm going to mark that out. Now it's a new level. Or I could say, I'm going to use an hourly and now it's a new level on the 50%. So, time frames get very subjective, whereas that's why I'm using opposing close candles. Or I can mark this out on an hourly. It's this level. I go to 4 hour, it changes a little bit, but 30-minute, same thing. 50-minute, it's the same thing. It's just structure where it's, here, here, and here, versus kind of when I'm changing time frames, even on the 4 hour, like it doesn't use that, but it's still the same idea where it's just a little less subjective. So I'm not really going to use the gap like that personally. Yeah, I'm gonna, especially this week, I'm gonna do more market updates. I think I'm trying to. Last week, the traveling definitely messed me up a little bit. I wasn't as in tune with the market, but I'm trying to kind of do the market updates in the platform in a sense where it's very straightforward. Because if I kind of spam that section, sometimes I feel it can kind of get drowned out. Whereas if I'm going to do a market update, it's usually something more significant or important versus small things like, oh, this is a day I'm probably not going to trade, or small things of that nature I'll probably just mention in the Discord, just in conversation, or I'm going to do it maybe in the analysis section. So I'm trying to find the best way to do that, where if I'm making a market update, that it's a bit more meaningful than just, you know, stuff in the Discord. I'm just going to mention if you have a question about stuff like that. You know, if it's a small thing like, oh, I'm not trading Monday, you know, that's just something I'll just mention in the chat. But yeah, I'll try to do a little bit more of those when I can, or as many as possible. Can you explain if the logic was there to take a continuation long position on Friday, 9:30 open to 50% of the weekly range? 9:30 on Friday. So the only issue with a continuation like this, it's really in the context, in the daily range. If I'm expecting a really large expansion day, that's going to be a little bit more valid versus when I'm trading a counter trend of the weekly range, I'm just expecting this to create, we have the open, the expansion. I'm really just expecting Friday to make that opposing wick. I don't expect it to, right, I just want it to be a little bit of a reversal daily candle versus some really large expansion, because you're just counter trending the weekly range. So in that scenario where it's already, you know, hitting objectives, it's a bit more difficult to expect too much more from that when we're kind of already creating that wick that we want to see. So I would say in regards to framework, where say this is, right, let's just pretend this was Monday, this is a Tuesday. In that scenario where we're expecting this to be a part of the weekly expansion, you're probably going to get more out of that move. But here on a Friday counter trend at this point, you know, it's going to be a little bit more difficult. And also kind of depends on, you know, what you're looking at. ES here, you know, it doesn't offer an entry, you know, maybe on NQ, you know, at 9:30, you know, on the 5-minute, I don't really see anything. You know, maybe if you drop down, yeah, it's not even that. I don't really see much of an entry with that, but it's really more based on the narrative there, where it doesn't really support a really large run back higher. This is kind of that move that you like to see, right? You really want to be positioned closer to that opening price, especially when you're counter trending like that. If that makes sense. Great, yeah, I can do that. I think that's just always how I've been, is probably trying to say less and keeping it more quality. That's just a tendency of mine. But I can try to just put more out there as I can, if that's what you guys want. Because, you know, you guys are kind of make, you know, what we do. So if that's helpful, then I'll do that. Let's see. Okay, yeah, I can note all of that stuff for sure. think I missed on the upcoming week. I think for Forex it was pretty clear. I think we'll track AUD as well. That has potential as well, but I think that's really all I need for the update for the week. Those two indices and then Euro. I don't really love oil here yet. Not much to comment on for that. Based on that daily chart. Gold, kind of similar for gold here. Gold is another one where you don't really have, like, I can't look at another pair and really help draw to a certain conclusion. Yeah, nothing here yet, but we'll see if anything kind of developed into this. Gold is kind of in the same category as, like GBP and oil for now. I have to up my game a little bit on Forex correlations for sure. Those are things I have to ask T about, because I know more of the basics of correlation between dollar and the majors, but yeah, when you get into like some of the other ones like New Zealand dollar or things of that nature, yeah, I can start looking into those as well. So upcoming week on indices. Tradable days, Tuesday, Wednesday, post NFP on Friday, yes. That's really general for non-farm payroll weeks. That's really what you're gonna get, is those 3 days. So that's what you want to be looking for. And really, even outside of the foundation model, that's kind of what you'd be more interested in. Yeah, EU and GU inverse dollar, those are kind of the obvious ones. And then I feel like AUD is kind of going in sympathy of those as well. It's usually going to trade higher with them or lower. Yeah, so gold, why nothing really catches my eye here for the time being is, this here, one, we're not really delivering lower off of anything relevant that I see yet, failing to run out that high, and then we're not really delivering off this low either. Mark that out on the daily. These are the two relevant levels that you'd be wanting to frame. And at this point here, we're not reacting very well off that low. There's nothing when I drop down internally yet for me to want to trade that higher. There's nothing there that could put me on side with the move here. And we're not delivering off this daily high that I'd be looking at to say that we should continue lower or retrace higher and then trade lower. So it's kind of trading that range without any side being really relevant. So I'd be more interested in seeing, can some manipulation develop in the weekly range, and how does that open up to get to, are we going to continue or trade back up to this high? So gold is, I had shared, let's see, where is that? Yeah, so this is the hourly distribution data or range for gold. 8, 9, 10 are going to be the most active times, and that's pretty obvious here. That's going to be most markets. When you get into Forex, it can be a little bit different. But gold, 8, 9, 10, that's probably going to be your ideal times to trade, just because that's, based on data, the most active times in the market. Yeah, gold correlated with silver. CL, there's UK oil, I believe. It's a correlated you can use for SMT, but again, I don't know. I mean, for me, I've never used that, but it can be used for SMT, I believe. Yeah, UK would be this here. So this could be used as SMT for CL, but not something I'm usually looking at. Oil does not have 930 open, but I think oil is another one of those markets where it's just going to be more volatile or really start around New York open and those early hours of New York. That's really going to be the most favorable time to trade. Like if we're looking at 8:30, we start getting that move. Here 8:30, 8 o'clock, the moves start. PM session in New York, it starts here 8:45 to 12. That's really kind of your time where the market starts moving, at least for oil. So would definitely kind of be focused on those times still. And New York is just an easier time to trade because you get to look back at London. XAU over silver. Yeah, silver has a very odd chart. What is that? I think it was SI. Yeah. It gets difficult when you start getting into things like this. Silver, even gold, it's tough. It's probably not as simple as a market to trade as something like indices or even Forex. It's just a little bit more challenging and a little bit more erratic. So I would say silver kind of falls into that category, and just based on the daily chart, gold seems to just trade a little bit more fluently. So I would probably favor gold over that. Or, oh, sorry, I completely read that wrong. But gold futures, not something I've ever traded. XAU USD is just a CFD version of it. I don't know. I honestly am not aware of what the spreads are like on gold futures in comparison to what it would be on a CFD. I just know most people who trade it are trading on a CFD. Sometimes when you get into these weird commodities or things like gold on futures, you have to have really large margin or funds to trade them. Sometimes, depends what it is. The bearish daily order block. So that has some potential there. It's a little bit more clear on, let's see, on NQ. The only issue I have with that is usually when I'm looking at something like this, I'd be very interested in this in the case that this is what the wick looked like. Right, we ran that out. Then I'd be really interested in seeing how this holds price lower. But kind of on the basis that we don't have that in play, this doesn't concern me as much. The only real thing when this comes into relevance is if we open up on the week and really just trade higher without any run lower, because one that doesn't set up any framework to long. When we get to that level, how are we reacting? We're gonna have some news. When we get to that point, is there anything to frame off of? And also being in regards to NQ or ES as well, or does that form anything in here as well? So it can play or come into relevance here, but for now I'm kind of just blocking that out because we're not there yet, and this is a fairly strong close. Not sure if you watched ICT's live streams in May. He was saying that Forex will be like crazy town in a few months. That it will be difficult to trade as brokers will be fiddling, so to speak. I did not watch it. I don't watch much of that anymore. But it's, I don't even know what that means. Or what he's hinting at, and I don't think it really would matter much. So really, just trade what you see, and you have a setup, you trade it. You don't, you're not, and you're managing risk with news, and I wouldn't really worry about that too much. So not something I comment on, say he's right or wrong, but trade is normal. What would you have considered that would have invalidated the bullish change in, say, delivery on NQ on Tuesday after the previous day low was ran out? What would you have considered that would have invalidated the bullish change on Tuesday? Well, I guess your invalidation is the daily profile. So here, one is you have that framework on ES, which is kind of from the start, which is where my focus is. But if you're looking at NQ here, not too shabby, running out that last low. I know we had SMTs at the low at the time, but your invalidation would have been, even by London session, you're completely invalidating these down close candles. Obviously by New York, we're far below that. So that would kind of be, that invalidation for it. And for me, the daily chart on ES was a little bit more convincing with that downside. So I almost would have been completely ignoring this and just looking at this up close candle instead, which we did eventually respect. Yeah, this here. So, I mean, if you were using this, sure, it closes above here, but, by the time you get to this open, unless you were, swing trading it. But I guess, again, it kind of depends on, what you're looking at. So when I look at the daily chart, which is where I'm starting, ES is kind of giving more clear framework, especially internally. Would you view it as the opening days of the week have manipulated higher or lower by then? By Tuesday, both sides have been ran out. So for me, I think we shared that perspective. 5:30. I don't even know what day of the week this was. Let's see. When was the start of this week? I'm lost. Jeez, 5:27. Yeah. I don't even know where the hell I said that. Someone had shared a perspective here. I think it was this. Yeah, so this is the example. Kind of comes to being more focused on ES. This is basically exactly what I'm looking at here. Like I said, that's the perspective I'm aligned with. Yeah, aligned with this perspective here. So based on just kind of the framework internally, it just is more clear on ES. So this is kind of a scenario where I'm more blocking out NQ, and this is pretty clear on the framework here to kind of trade that internally lower. And on NQ, you know, to trade this higher, you know, while the bias is still, you know, if I have that perspective on ES at this point, even though it closes above, everything is still valid on that move lower, even for both, right? It didn't trade above this high yet. And even though we have this close above, you know, if you're going to trade with that idea, by the time we get to the next day where you'd be looking for a position, it just gets invalidated by the daily candle before it offers an entry. So, you know, that could work. But, you know, if you're looking short, it doesn't trade above that high. It doesn't invalidate it. I think that even is an SMT. But if you're, you know, you're looking long, that could work potentially, and you could say, okay, it's trading both sides of the range, but, you know, you don't really get an entry, and then you kind of have to readjust from there, which is why, you know, playing the range wasn't all a bad idea. I was watching the midpoint of May 23rd, daily candle on NQ. Wednesday's closure as a confirmation for sells. Is that down close candle something to be paying attention to? In all fairness, no, because, you know, I wasn't looking at that at the time, and I think it can work, because, you know, for me, I'm usually looking, like, if I'm looking, you know, well, I mean, it does work, right? If you're thinking continuation higher and you get a close below this down close candle that you're expecting to support price, that can be an invalidation because we're closing below that down close candle, you know, and that works. There's nothing wrong with that. I think I was just looking at it slightly differently. Nothing really wrong with that closure and using that as a confirmation for, you know, selling that lower because it's not supporting price in that way. So I think I was just looking more internally at the highs instead of, you know, that right there. So nothing wrong at all, and I think that's completely valid to use it in that way. A trade on February 22nd. Oof. Let's see. This was NVIDIA here. NVIDIA confirmed midweek reversal. Thursday. Jeez, where did I even enter on this trade? Oh, this is a very discretionary trade. So this was, I believe I entered around here, if I can jog my memory properly. So this was basically just a continuation, more of a positional trade that I kind of took a shot at here. So a lot of the times, this was NVIDIA here. I believe it was NVIDIA. It was some very large earnings that confirmed this reversal. A lot of the times when we get that really strong into close on a news driver like that, we just kind of continue throughout the rest of the session, especially overnight. It kind of just trades higher. That's a pretty usual tendency. And I believe I took this as a buy here. So really aggressive move into the close. I'm kind of just expecting price to continue running, and this is really just the entry here. Here, down close candles, we have 25-point range. I believe I gave it a little bit larger than that, but in the overnight session, you don't need too much. So it's more of a positional entry in that continuation, but it's a very particular scenario when you get stuff like that. But that was kind of the logic behind it. yes, have not forgot about the course. Still getting it going. I do kind of feel bad that's taking a little bit longer than I expected. But working on it as much as possible as I can. And it's going to be it's just an additional thing. It's not really particular to the course. It's kind of, or the foundation model. It's just an entire thing that you can apply. And then I want to try something here. Let's see. I kind of want to get as many people as can kind of mention. I just want to talk about, outside of the charts, like kind of barriers to consistency or barriers to trading in itself. Because a lot of these things that are extremely difficult with trading are, we can kind of learn about the charts and gain an edge in a closer amount of time or in a shorter amount of time than it takes to really learn about yourself or finding the way to make the right decisions. So I want to ask anyone that's willing to share, like, for your personal self, outside of reading a chart, what kind of holds you back from that consistency that you're looking for, whether it's emotional, whether it's intraday rules or following a plan, holding winning trades. What is that thing for you that's really difficult? And I want to kind of just build some topics that I'm going to kind of make a lesson on for the future. Whoever can share, it could be one thing, it could be a paragraph, it can be a sentence, doesn't really matter, just whatever that may be for you. I'm just kind of curious. I think a lot of people may have similar answers for that. But yeah, that's the last thing I want to do. So I'm going to do something on that in the future. But about an hour and a half there, so all I have for that one. That's really it.